Good morning, everyone. Welcome to another edition of the Vetiva Breakfast Meeting, brought to you by Vetiva Capital in partnership with Frontier Africa Reports. Today is Tuesday, the 7th of September, and in our meeting, we'll be hearing from the Global Equities Desk, as well as our fixed income trader and our partners at Frontier Africa Reports. And I'll also be giving us a brief summary of the recently released Stanbic IBTC H1 results. Before we begin, I'd like to remind everyone that this meeting is being recorded, and that recording will be shared with third parties, and is also being broadcast live on our Facebook page. After our presenters have spoken, we'll take questions if time permits. But if we're unable to answer all of the questions that we may have today, do feel free to forward any questions you have to research@vetiva.com, and we'll get back to you as quickly as possible. We'll start with a rundown of the local and international stock markets from Symbiat. Good morning, Symbiat.
Good morning, Joshua, and good morning to everyone. So yes, I'll be doing a quick rundown of the Ghana markets and Nigerian equities markets performance yesterday. And starting in Ghana, the exchange closed started the week positive as a composite index advanced by 2 basis points on the back of renewed interest in names like Total Ghana and Benso Oil Palm, with both counters setting new year high prices. A total of 9 equities traded yesterday, out of which the session ended with 4 gainers and no losers, while market activity also traded down, and with MTN Ghana accounting for 62% of the total traded shares, followed by Enterprise Group and EcoBank. Going into today, we expect market to trade in line with Monday's session, given the sustained local buying pressure across board. And in Nigeria, we had the reverse as we saw market start the week negative, with index shedding 2 basis points, majorly as a result of 41 basis point dip in the consumer goods space, specifically in flour mills and Dangote sugar. Yesterday, flour mills lost 4.17% to close at 28 naira 75 kobo, with year-to-date return at 10.6%, while Dangote sugar closed down by 2.25% to settle at 17 naira 35 kobo. While the 2.25% loss in Dangote sugar eroded the year-to-date return, and it's now trading at a negative 1.42%. Speaking to one of the positive yesterday, the banking sector was the best performing index with a 48 basis points gain, as we have continued to see stronger buy interest in Access and Zenith Bank. As expected, market traded mixed, with volume improving by 17% on the back of small cap names dominating activity charts. We saw names like Mutual Benefits and Sovereign Insurance, while turnover traded down by 19%. For today, we expect similar trading pattern to filter into today's trading session, with the market experiencing somewhat big activity levels. And we also expect investors to continue to cherry pick attractive counters across board, from the small to large cap names in the banking space. And speaking to the banking space and the expected half-year results, Stanbic released theirs, and our banking analysts will be giving us in-depth analysis on this. But it's important to note that the company declared a 1 naira dividend, which is a 150% increase in comparison with last year's interim of 40 kobo. And meanwhile, the stock closed down 1.38% yesterday, and yesterday returned at a negative 11%. Going into today, we'll see how the markets will react further to this news. Thank you, and that'll be all from my end.
Thank you very much, Cynthia. Next, we hear from Omarege, our fixed income trader on the fixed income markets. Good morning, Omarege.
Good morning, everybody. System liquidity declined significantly yesterday to open at about 170 billion positive, coming from the 393.1 billion positive that was recorded on Friday. Despite the decline in system liquidity, money market rate losing by an basis point on the back of reduced fund pressure in the market yesterday, as OBB and overnight closed at 8% and 8.5% respectively. For today, we expect interbank rate to trade at lower levels as OMO repayment of about 170 the system. The parallel market lost 2 naira, opened at 411.82 naira to $1. The highest trade that was recorded yesterday was 412.53 naira to $1, while the closing rate was 411.13 naira to $1. Brent gained about 0.5%, while WTI lost about 0.2% to open today at 72.53 and $69.14 per barrel respectively. As expected, the T-bills market opened this week on a very calm note, with continued interest on the long-dated maturities, especially on the August 2022 papers, while trades were majorly consummated on the CBN Special NTB, that's the 29th November 2021, while we also saw some trades consummated on the newly issued one-year paper, that's the 25th of August 2022 maturity. Overall average benchmark rate remained unchanged at 4.57%. The OMO segment also opened the week on a very quiet note with few trades recorded, while average benchmark rate remained unchanged at 5.99%. The bonds market opened this week on a quiet note with little demand seen in the secondary market, as rate declined by about 10 basis points during the start of the trading session yesterday. Trades were majorly consummated along the mid to long end of the benchmark curve, especially on the 2035, 2036, and the 2050 maturities. We, however, saw it trend higher during the closing hours of yesterday's trading session. Day on day, average benchmark rates rose marginally by about 1 basis point to close yesterday at 11.55%. The Eurobond market opened this week on a muted note on the back of reduced flows, as the US market was closed yesterday for the Labor Day celebration. We witnessed few interest on the Nigeria 2032 and the 2038 maturities. The corporate space also traded on a muted note with few interest on the EcoBank Eurobond. For today, we expect the current sentiment in the bonds market to persist as players continue to select attractive offers across the benchmark curve, while we expect the T-bills market to trade actively today on the back of the OMO maturity of about 170 billion that's coming into the system. We expect that to spur some buy-side interest in the market today. That will be all for fixed income. Thank you.
Thank you very much, Omarege. I'll now quickly go over the Stanbic IBTC results that were released yesterday. So Stanbic reported gross earnings of about 93.6 billion, which is a 26% decline from half year 2020. This came as a result of a 20% drop in interest income. Interest income printed at 44 billion, while interest expense was down 35% to 11.4 billion. So net interest income came in at just over 32 billion. Non-interest income was also down like 31% year on year. The only line item under non-interest income that saw any improvement was fees and commissions, which were up 32%. The bank also reported an 84% decline in income from investment securities. Operating expenses also went up by about 17% year on year to 58.8 billion. The bank also reported positive provisions, so net write-backs of 1.3 billion thereabouts. Overall, this meant that PBT came in 53% lower year on year at about 24.7 billion. And profit after tax came in 50% lower year on year at 22.5 billion. As India already mentioned, the bank declared an interim dividend of 1 naira, which is significantly higher than what was declared last year. However, it is worth noting that this is not the first time that they have declared 1 naira interim dividend. I think they did so 2 years before. We'll have more detailed reports out later today, and that'll be all for Stanbic. Next, we'll hear from Sheikh on the BRVM stock exchange from CTF. Good morning, Sheikh.
Hello, good morning. The financial market, the BRVM market is on the rise again after the breakout imposed by a few big capitalization over the last week. The BRVM composite is thus back on the saddle with the weekly performance of plus 0.061%. This previous week, the buyers were firstly challenged by the sellers, causing a toss of the index, which ended up closing the week higher on a positive note. In terms of the balance of variation, buyers allowed 25 stock to end the week in a positive note against 14 in the negative. However, the largest market cap, Sonatel in this case, fell by minus 0.69%, reaching 13,700 CFA, which explained the slight rise in the market despite a large number of rising values. Several companies, it is important to note that several companies released their first half of 2021 activity report during this week. In this case, you have Chorus International Bank and SMB, which finish on a positive note with respectively 3.31% growth of the stock and of the price of the stock and 1.03%. Whose results caught the attention of the investors. In terms of the best performers of the week, the Alios Finance or SAFCA, the stock closed the week with plus 32%, despite the poor result achieved by the company. The company started the 2021 year with a loss of 444 million CFA in the first quarter. The increases recorded by the share, in particular those made during the 35th week, which is this previous week, can be explained by the fact that stock marketers who by intimation take position without analyzing their investment choice. Around 2.3 million CFA were traded on the stock. The second performer was Bolloré, who's back in the elite performers with a performance of plus 19.70% in growth of stock. And this was in the wake of the publication of their first half annual results. In terms of the bigger declines in the stock market in the previous week, Solibra was leading the way with minus 13.76%, which recorded for the second time in a row the largest decrease in the market. Having taken advantage of the crazy capital gains garnered by the title in August, investors are in the logic of collecting capital gains and dropping out of their position on a massive scale. Similar situation for Sucre Ivoire with minus 8.21% decrease, which loses its dynamism from the previous weeks. Yeah, so that's about it for the stocks. In terms of bond market, the market closed with a total market capitalization of 7 trillion CFA, 7.088 trillion CFA, which is a decrease of 0.2% due to the partial repayment of the bonds of the state of Ivory Coast. And the company Senelec, the weekly value traded was around 9.24 billion, mainly driven by the bond of Ivory Coast for a total amount of 4.57 billion CFA during the 31st of August session. In terms of money markets, the main issuers were Burkina Faso, Niger, and Senegal, who intervened in the money market requesting $100 billion in debt, and investor offered 250 billion. Only 43.9% was retained. The most popular issue of the week was the Senegal Treasury bond, with a cover rate of 566% for a total amount of 283 billion CFA. In the next week, in this current week, we are expecting Guinea-Bissau, Mali, and Ivory Coast to issue bonds totaling totaling 75 billion in the market. That's it in terms of update from the BRVM.
Thank you very much, Jake. Next, we'll be hearing from Justina from Frontier Africa Reports. Good morning, Justina.
Good morning, everyone. So we start here in the Southern African region, where Steinhoff International Holdings ex-chairman Christo Wiese has given his support for the company's plan to resolve more than $8 billion of legal claims, and is set to vote for the settlement offer. Wiese, who was the biggest shareholder in the company, is joining other claimants to cast their ballots on Thursday. In Zimbabwe, the central bank's governor, John Manguda, has warned firms to stop manipulating the exchange rate by exploiting the gap between the parallel markets and official currency prices for profiteering. According to him, he has raised concerns that companies are snapping up more than foreign currency that they are allowed to through the auction system, and they're selling at an inflated price. Also in South Africa yesterday, consumer confidence improved slightly to -10 points in the third quarter from -13 in the second quarter. Now, in the East African region, Kenya's National Treasury is seeking Parliament's approval for tax exemptions for more than 187 employees and managers of Kenya Airways. According to them, these employees were entrenched between January and March this year. The board of Onga Group PLC has confirmed the appointment of Joseph Shoge as the new managing director of the company with effect from December 1. In Mauritius, tax collection dropped 5% to 89.3 billion rupees in the 2020-2021 financial year. Now, in the North African region, Egypt's Minister of Finance, Mohamed Maït, confirmed that no new taxes have been imposed on the stock exchange and denies any intentions to do so. That comes after a lot of outcry by banking officials and stock market officials about the new tax hikes, but now they are confirming that there are no new taxes that will be imposed. S&P Global Ratings warns that Egypt's soaring rates attract inflows but carry risks, adding that the country must find a way to pay less on its debt if it's to weather a potential increase in global interest rates. That's according to S&P Global Ratings. Now, the Tunisian insurance and reinsurance company posted a net profit of 8.5 million dinars in the first half of 2021, representing an increase of 34.9% from the same period last year. In Morocco, Mutandis posted a turnover of 689 million dirhams in the first half of 2021, up slightly by 0.9%. In the West African region, Access Bank yesterday said is planning to launch an additional Tier 1 subordinate bank bond notes of up to $375 million on the 15th of September. The proceeds will be used to boost working capital and support growth. It will also be listed on the London Stock Exchange. Also, in the West African region, yesterday, prices of aluminium ore bauxite from Guinea hit their highest in almost 18 months as buyers concerned for supply grew due to the recent coup. Experts say that the coup is unlikely to have major impact on the bauxite exports. Moody's also has affirmed the B3 long-term issuer rating of the government of Ghana with outlook still negative. According to them, it reflects the country's high debt burden, which is unlikely to fall rapidly if they do not contain this high debt burden. Leading, also here in Nigeria, we have a leading African investment company, Arise BV, who has made an additional Tier 1 investment of about $7 million in EcoBank Transnational Incorporated. This follows an earlier groundbreaking $350 million subordinate sustainability Eurobond issued by EcoBank in June this year. According to them, the additional investment will be deployed to meet the bank's general corporate obligations, which include loan growth and to strengthen the capital buffers of profitable subsidiaries. And that's all from us here in Frontier Africa Reports. Thank you for listening.
Thank you very much, Justina. Now that all the speakers have finished, we have come to the Q&A segment. If you have any questions and you would like to speak, you can raise your hand and you'll be allowed to ask a question. Or if you prefer, you can leave a comment in the chat box or in the Q&A box. Or if you are joining us from Facebook, you can also leave a comment in Facebook under this post and we will answer your question. All right, it seems we have a question from an anonymous attendee. It says the result of Stanbic is significantly poor. Any indication as to the reason for the drop in both top and bottom line? And when is the analyst call taking place? So yes, the Stanbic results are quite poor. As for the reasons why there's been such a huge drop in top and bottom line, in actuality, if you look at the results, you see that the Q2 results were actually a slight improvement, and these issues actually began in Q1. So quarter on quarter, the bank actually saw an improvement in interest income by about 10%, and an improved, well, non-interest income remained flat relatively. And overall provisions actually went up by about 628%. So they did about 155 million in provisions in Q1, but did over 1 billion in write-backs in Q2. So overall, the difficulties began in Q1, but year on year, they're still trending significantly weaker than last year. As for when the analyst call is taking place, I believe it should happen sometime later this week. And when it does, we will have a full breakdown of management comments. But overall, I think what we've seen is a clear delineation between some of the Tier 1 banks and their own operations and how they've been able to manage coming out of the pandemic, and the Tier 2 banks who have suffered more significantly. And as we know, Stanbic's activities or Stanbic's non-banking activities have usually been the most profitable for the bank, for the group rather. And so if there's been a drop in activity in investment banking activity, in asset management activity, that will have a much larger impact on the company than other banks that are more traditional. And that has been the case from what we've seen. Access Bank has done quite well year on year. Same thing for Zenith Bank. We're yet to see GT's results, but the assumption is that even if they are weaker as they were in Q1, it will still not be to the same extent as what we've seen with Stanbic and the other tier 2s. I hope that answers your question. All right, it appears that we have no more questions. If you do have any questions and you'd like to email us, our email address is research@vetiva.com, and we will get back to you as quickly as possible. With that, we've come to the end of today's meeting. Thank you so much for joining us. We hope that you join us again tomorrow for another edition of the Vetiva Breakfast Meeting. We hope that you enjoy the rest of your day and have a good morning. Thank you.